Welcome to Home Biz Tax Talk. My name is Lysandra Everett, and I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to home business owners. Today, we are talking about the 1099-C. I got an email, actually an inbox from somebody that says, hey, I got this 1099-C in the mail. What do I do with it? Okay, so a 1099-C is a cancellation of debt. That means that you owed for something. It could have been credit cards, it could have been a car, it could have been a house, and you negotiated a settlement price, right? So you may have owed, let's say you owed $5,000 on a credit card and they negotiated down to $1,000, okay? So you're going to get a 1099-C. You're going to get a 1099-C when that settled amount is greater than $600, okay? So then what happens, just like with the 1099 miscellaneous, that form gets sent to the IRS and it gets counted as income. Now, this is really important because number one, there are a lot of groups that are helping people settle debts. Okay, I've seen it where you're settling, settling credit card debts, old car loans, whatever, settling these debts, and everybody's like, woohoo! I got this debt settled, but there's me in the corner going, excuse me, you better find out if you're going to be expecting a 1099-C, because that amount that's settled that's greater than $600 gets sent to the IRS and it gets counted as income. The reason this is uber duper important for this tax filing for 2017 is because of the change in the real estate. Way back when we had the real estate debacle, the crash, and all of that, one of the things that was the provisions that was put in place is that canceled debt that was secured by real estate was not taxable. Well, that went away quietly December 31st, 2016. So starting January 1, 2017, any real estate debt, if you had a short sale for your home, for instance, that difference is now taxable income to you. So you no longer owe on that house, but you dang sure could be owing the government for that difference in the settlement. So if you had a $500,000 mortgage and then you had a short sale for $300,000, that $200,000 difference, yeah, that's now counted as income starting January 1, 2017. Okay, so there are going to be people that are really going to be surprised by that, because it's not like there was some big, huge announcement that went out and said, hey, this is happening, right? I mean, I've even talked to other real estate agents and they had no clue that this went away. Right. So you just got to understand that 1099-C is now going to be counted as income. So for all the folks that were settling debts like it was their jobs, great, I'm glad those debts were settled, but now you better be looking for those 1099-Cs in the mail. And if you don't file, it will be considered an underreporting of income, which you will get this nice letter in the mail that says, hey, this is what you filed. This is what was reported by a third party, because they have the computer matching, right, for these forms. Okay. I keep having to stress that because people think, okay, I get this form and the IRS doesn't know. Absolutely not. Any form that has to do with taxes, the 1099, W-2, all of that stuff, if you get a copy, the IRS also gets a copy, okay? So the IRS has this 1099-C that's sitting there waiting to be matched with a return. And if they don't get that, then that's when they come for you and say, hey, this is what was reported, this is what you reported, and they will adjust and let you know how much you owe. And oh, by the way, if you underreport more than 20% of your income, then guess what? There's a penalty for that. So not only do you get the penalty for the taxes and whatnot that you may owe, you also get an underreporting penalty, and you get interest added to said penalties. It's compounded daily. Yeah, so it's not good. So so you need to, so you really need to think about, this past year, in which I do believe the deadline for the 1099-Cs is also January 31st. Don't quote me on that. But you should be looking for these forms in the mail. Please, oh, please, oh, please, do not just arbitrarily decide to not report the 1099-C, because like I said, it's already there waiting for you. So it's not necessarily that's going to be something that comes up next year if you don't do it, or even the year after, okay? And it could be sooner than that, who knows? It just depends on how the computer matching goes and filing your return and all that. But you will get a letter that says, hey, you owe us money on this right here, and we'd like our money, please and thank you. All right. So yeah, so that's the nuts and bolts with the 1099-C, you guys. You got to report it. And, so like I said, if you negotiated debt, I had a person who whose car was repossessed. They got the 1099-C for the canceled debt, did not report it, and so they got the underreporting penalty and interest, and it was just, it was just ugly. And oh my gosh, here's the other thing that happened with that, almost totally forgot. So then what happened is, with that 1099-C being counted as income, it made them ineligible for other tax credits that were based on income. And ooh, when you get a tax credit disallowed, that is not sexy at all, because once you get disallowed one time, even if it was an error, okay, even if it was an honest mistake, once you get a tax credit disallowed, especially the child tax credit, the earned income tax credit, whoo, you have to really prove, like beyond a shadow of an inkling of a doubt, that you are entitled to your into the tax credit in the future. And they ask you, there's a box on the tax return that says, have you ever had a tax credit disallowed? Then you better get ready for a whole new ball of wax of, them really going through your return to making sure that you are entitled to receive that credit. So yeah, understanding that it's not just that it gets reported as income, but it can also knock you out of any other tax credits that you might have received if you would have been eligible for the earned income tax credit, the child tax credit, American Opportunity Credit. These, especially the refundable credits, listen, don't play. All right. So yeah, so that's it for the 1099-C. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish. You can come here to get your questions answered about your home business taxes. I will see y'all next time. Bye.